Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Good morning, fellow traders. How are you? Good to see some of you joined our Telegram channel, guys. Yeah, so just to let you know, we've got a Telegram channel that you can subscribe to now as well. Right, today is Wednesday, the 18th of May. And we're going to look back at yesterday's trades, first of all, and then we're going to look at today's potential trades and the important news for today. So let's start straight away and look at yesterday's trades. Okay, so this is the first one that we were looking at, guys. Yeah, this was the pound against the Swiss franc. And all we were trying to do, guys, is long this market for the following reasons. Okay, so price came down. It created a new lower high here. Yeah. These highs here and came back down, but as you can see, it shot back up, and with this candle here, it broke these highs. All right, so for me, we have higher highs and price is clearly in an upward structure, an uptrend. Okay, so all we were trying to do was take price from here up to this blue line, and as you can see, guys, that's exactly what happened. Yeah, and pretty quickly. Okay, so let's see if we could get in on this trade though. So if we look at the H1, this has happened a few times this week, guys. By the time I wake up, we have already hit the higher time frame target, okay? Which is a little frustrating, but it also tells me that I'm choosing the right trade. The direction is good. Okay, so by the time I got up was around here, okay? And before you know it, price shot up and hit our blue target. So for me, I didn't have a trade, guys. Yeah. Okay. Even this candle here didn't tell me that buyers were in control because of this wick. Okay. So I wouldn't have entered on that candle. Even if I got up, entered a trade. Yeah, I couldn't enter on this candle because the wick. All right, but as you can see, the next candle takes us to our higher time frame zone. All right, so direction's good once again, but couldn't get in on this trade, guys. Maybe you did. If you did, let me know. Leave a comment. Right, the second trade from yesterday was this. This is the Swiss franc against the Japanese yen. Okay, and we've been trying to short this market for these reasons. All right, so it was in an uptrend. Okay, price came down, broke these lows, created lower highs. Okay, these lows were broken as well, price came down. Clearly in a downward structure. We had this very bearish candle, which told me, yeah, sellers have complete control of this market. Okay, however, for the last 1, 2, 3 days, we've had quite, bullish candles. But as you can see yesterday, this wick here rejected our grey zone. All right, so we were trying to short this market from one of these grey zones. Okay, so yeah, and just take price back down to the low or even this blue line here. Okay, but let's see what actually happened on the H1. Okay, so let's take a look here. So as you can see, guys, price came up to this grey zone. Okay, but yeah, but none of these candles tell me sellers are in control. Yeah, even if we zoom in a little bit, guys. Yeah, sorry about my big head in the way. It's my production manager's fault. Yeah, this candle here, sellers are not in control, guys. Yeah, it's got a wick this side. Sellers are not in control. It just goes to show how important it is to wait for a candlestick pattern. Yeah, some people might be quite aggressive and enter on this red candle. Yeah, but you will get stopped out. Yeah, sellers are not in control. Yeah, and sure enough, price goes up, 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 up. until eventually it hits our second grey zone. Okay, and I got in here, guys. Yeah, the H4 candle, yeah, was telling me not to be quite honest with you. Like I say, guys, I'll always be transparent with you. But because this market had retraced so much, yeah, it seemed like such a good value area once it reached this grey zone. Okay, so once it reached this grey zone, this pair was offering excellent value. Yeah, so I eventually got in on this candle here. Okay, and again, this is quite aggressive as well, guys. Yeah, because you have quite a large, well, not a large wick, but you have a wick on this red candle here, on this bearish candle. Okay, nonetheless, I entered on this candle. Yeah, I liked it because, like I say, the chart had retraced so much. Okay, so I entered on the close of this candle. I put my stop above here. I will look to close 80% of the trade around the 129.50 mark. So I'm still in this trade for 100%. All right. Okay, but I will close 80% at this 129.50 level because it's a psychological level, and then I'll leave 20% to run down. Okay, so as you can see, guys, I'm in profit currently in this trade, probably about 1:1. Okay, but yeah, I'm going to let it run a little bit further, guys. So I did get in this trade on this candle here. All right, guys. Again, if you got in this trade, let me know. Leave a comment. Third trade from yesterday was this. This was the US dollar against the Japanese yen. All right, so price was in an uptrend. Higher highs, higher lows, higher highs, higher lows. Higher highs were not created. Okay, and we had a rejection there as well. So this tells me, yeah, the structure could be changing. And then sure enough, these last lows were broken with this candle. Okay, so we are in a downtrend. And then what I was trying to do, guys, off of this doji, yeah, was just trying to take price back down to this blue line here, just back down to these lows. Okay, so that was the idea. Just to let you know, guys, as well, I still think this is a short. Yeah, we've had two dojis. Yeah, I still think we can bring price back down to this blue line. Okay, but let's look at H1 to see what happened for us yesterday. This was a frustrating trade for me, guys. I had two bites at this apple. So as you can see, guys, price came up into our grey zone. Yeah, and we had this candle form. Okay, the candles were for this one, sellers not in control, sellers not in control, sellers not in control. But this candle here told me that sellers were in control. Yeah, we had a huge rejection wick. So I entered on this candle. I entered here, put my stop just above the grey zone. Okay, and the idea was to take price back down, yeah, to these lows here. Okay, all right, so just these last H1 lows here. As you can see, guys, that didn't happen. Yeah, okay, so price come back up, my stop was here, and I got taken out with this candle. Okay, no problem. You will have losing trades. As long as you follow your management, you are fine. You follow your money management and risk management, and losses are okay. Okay, so got stopped out of the first one. Then I re-entered this trade. Yeah, I still believed in this trade, and then I re-entered on this candle. Okay, I know I've mentioned to you before, guys, sometimes some of the banks, the hedge funds, they look to build enough orders so that they can take price lower. All right, so this is what happened here. Yeah, they're taking out all the stops, stops, yeah, including my stop. Okay, so it's taking out all the stops here, yeah, so it can build a big enough trade to then enter and take it lower. Okay, so this is quite common in the markets as well. All right, but anyway, I entered on this candle. Okay, I entered on the close, put my stop above here, and then I got out back down at these lows here. Okay, because I had more than a risk to reward of 1:1. Okay, closed 80% of my trade here, and I'm still in this trade for 20%. Okay, so yeah, judging by the day chart, I think this could well come back down today, but let's see. All right, so that was a good trade, guys, although the first trade was unsuccessful. Okay, guys, so that was the recap from yesterday. Please let me know how you got on with these trades. Yeah, so I had a mixed bag on the US dollar Japanese yen, although I managed to pretty much break even, and I'm still in for 20% on this trade. The Swiss franc against the Japanese yen, we had, we're in a good trade, and pound Swiss franc didn't have the opportunity to get in, woke up too late. All right, guys, so that's the recap. Let's look at today's trades now. Guys, if you enjoyed yesterday's recap, then please smash that like button, guys. Yeah, it helps support the channel, and subscribe to Simply Forex and come join us. It'll be greatly appreciated, guys. Right, trade ideas for today, for Wednesday, the 18th of May. We've got two potential trades, guys, today. The first one is this. This is the euro against the pound. Okay. So this is the day chart, but before we start, let me show you the weekly chart. All right, so as you can see on the weekly chart, yeah, these highs here have been broken, yeah, with this large candle that formed a couple of weeks ago. Okay, so on the weekly chart, we have higher highs. Okay, so bearing that in mind, if we look at the day chart, yeah, we also see an uptrend. Okay, so price was coming down, but then boom, yeah, we created higher highs. Okay, higher highs, and we've got lower lows. Yeah, price came back down, came back up, tested the high, and now, yeah, because of this large wick that I'm seeing, we've now got a new higher low. Okay, so let's look at the candle in more detail. Sorry, guys, and the plan is just to do this. Yeah, all right. But if we zoom in a little bit, yeah, this candle, I know it's a bearish candle, guys, but this wick, look at this wick. Yeah, this tells me that we've had a real rejection at this level. Okay, so although it's not a very bullish candle, because of the weekly candle, because of the daily structure, and because of this wick, all of these reasons tell me I can take this pair higher. Okay, guys, anytime you enter a trade, you have to have several reasons to enter it. Okay, always bear that in mind. Why am I entering the trade? Okay, and for these reasons, I'm entering this trade if we get a setup. All right, so we're looking to take price from here back up to this blue line, or even this last high here. Okay, the first blue line corresponds with this and the psychological level of 8,500, and then obviously the second blue line are these highs here. Okay, but let's look at H1 for execution. So we've got a couple of things that could happen here, guys. Okay, so price from here could come back down to this grey zone. Okay, if that happens, comes down to the grey zone, we want to see a bullish candlestick pattern form. We can then take price back up to these last highs, yeah, where we close 80% of the trade, and then we leave 20% to run up to one of our higher time frame targets. Okay, so that's the first scenario. Okay, that will, if this low here breaks, that is what will probably happen. Okay, if that doesn't happen, guys, then what I'm looking for is price to do this. So price leaves, oh, sorry, wrong button. So price leaves the grey zone. Okay, yeah, breaks these last highs here, comes back into the grey zone, retests it. We see a bullish candlestick pattern form here. Then we can take price back up to our blue line. Okay, I'll probably close at a risk to reward of 1:1, wherever that may be, here, here, or here, and then leave 20% to run up to probably our second blue line, guys. Okay, all right. And guys, a lot of you have asked, why do I close 80% of the trade at roughly a risk to reward of 1:1? Well, to be honest with you guys, it's to help me psychologically. Okay. If I close 80%, I've already secured profit, regardless of what the 20% does. So once I've secured 80% profit, then the 20% I'm happy to let run. Yeah, I have no problems letting 20% run. But psychologically, I found about myself that I find it difficult to let 100% run. Okay, so yeah, it's for psychological reasons, guys. All right. Okay, but yeah, euro against the pound, guys, we are looking to buy this market, and those are the two ideas we have here to enter this market. The second trade is this, guys. This is the US dollar against the Japanese yen. Okay, so yeah, not much has changed on this pair, guys, because we've had a couple of dojis. But let's have a look, guys. So it was in an uptrend. Yeah, we looked at this chart many times, higher highs, higher lows, didn't create a higher high, and these lows here were broken. Okay, and now we've come back up, okay, and we've had two dojis, okay, which generally tells me indecision, okay, but yeah, because it's in a downward structure, because of this bearish candle, yeah, none of these candles have tell me that buyers have taken control of the market. Yeah, none of these last 3 days tell me buyers have taken control of this market. Okay, so I'm still looking to short this market down to this low here. All right, let's look at H1 for execution. Okay, so I've slightly adjusted my grey zones, guys, and there's a couple of scenarios we can look at. So price could come back up into this grey zone, yeah, okay, but again, we want to see a bearish candlestick pattern form, okay, then we will take price back down to these, arguably these last H1 lows here, or even here, okay, all right, so we'll, yeah, enter the market, close 80% at one of these levels, as long as we get a risk to reward of at least 1:1, okay, and then we'll let 20% run down to our higher time frame target. Okay, so that's the first scenario. If that doesn't happen, guys, price could drop quite aggressively. Okay, so then what I'm looking for, guys, is price to come down. Yeah, this grey zone is this last H1 area of support. I want it to come down, break this grey zone, come back up, retest this grey zone, form a bearish candlestick pattern, we can enter the trade, and then we can take price back down to our blue line here. Okay, so yeah, again, a couple of scenarios could happen. Okay, guys, but we're looking to short this market. All right, guys, so they're the two trade ideas for today. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and would like to receive it every single day, Monday to Friday, then please subscribe to the channel and smash that notification button. That way you'll receive an alert every single morning and won't miss a single one. All right, so go ahead and do that, guys. Right, news for Wednesday, the 18th of May. Okay, so overnight, yeah, we had a 3-star rating coming out of Japan, the GDP. That was better than expected. Okay, but that's been and gone. Okay. The first one that we're interested in today, guys, is this. At 7 o'clock GMT, coming out of the UK, we've got CPI, which is inflation figures, guys. And a lot of eyes have been on inflation, guys, because it's is a big deciding factor when trying to come up with an interest rate. Okay, so a lot of the central banks are looking at inflation figures at the moment. Okay, if we carry on down, we have At 10 o'clock GMT, we have more inflation data coming out of the euro. Okay, so I've explained how important that is. That could move any euro pair. If we carry on down, 1:30 GMT coming out of the US, we've got building permits. And at the same time, coming out of Canada, we've got more inflation figures. Okay, so a lot of inflation figures today. Okay, so that could move the US dollar, that could move any Canadian dollar pair. We carry on down at 3:30, we've got crude oil inventories. So as I've explained many times before, not only will that affect the US dollar, but also the Canadian dollar, okay, because it's very heavily correlated with the price of oil. And then after that, guys, as you can see, no other 3-star ratings that we're interested in. All right, guys, so yeah, I hope you've enjoyed the vid this morning. If you have, please subscribe, like, and share with your friends. That would be greatly appreciated. I hope you have a wonderful trading day, and I'll see you tomorrow, guys.